Hi everyone, good morning. I am Santosh Mahapatra. Today I will work out a problem solution relating to scope of total income basing on residential status of an SSC. Basing on residential status of an SSC. I mean to say that how to calculate the scope of total income, how to compute the scope of total income according to residential status. It will mean that if an SSC is a ordinary resident, not ordinary resident and non-resident, then how to calculate or how to find out the total income of an SSC. So in board, the treatment are mentioned, and I will explain step by step the financial transaction to be treated on the basis of residential status. So the first financial transaction, that is salary received in India for services rendered in Spain. So while making treatment of different financial transaction, one must identify the nature of income into two categories. I mean, which income are treated as a Indian income and which income are treated as a foreign income. So let us go for the treatment. Let us go for the finding out the scope of total income basing on residential status. So the first one, salary received in India for services rendered in Spain, 5,30,000. So here the treatment will be salary received in India, that is a Indian income, and here the salary is 5,30,000 minus 50,000. That is standard deduction. So it may be, the standard deduction may be 75,000 in new regime. So while adding the salary in scope of total income, while making a calculation, the standard deduction must be allowed. So here 5,30,000 minus 50,000. So as it is an Indian income, it is taxable in all three cases. That is 4,80,000, 4,80,000 and 4,80,000. As it is an Indian income, it is taxable in all cases. I mean ordinary resident, not ordinary resident and non-resident. So that is the first transaction. The second transaction, income from house property in Italy. And additional information is given. 60% received in India, rupees 2 lakh. Again, income from house property in Italy, additional information, that is 60% received in India. So let us see how it is treated. So here, income from house property in Italy, that is 2 lakh and 60% received in India. It will mean that 60% of the house property income will be treated as a Indian income. So that's why 1,20,000 is taxable in all three cases, and the rest 40%, I mean 40% income from the house property will be treated as a foreign income, and it will be treated as a taxed in case of a ordinary resident. I mean 80,000 is taxable only in case of a ordinary resident because it is a foreign income. That is the second transaction. So we are discussing about the computation of total income according to residential status. So the third financial transaction, that is profit from a business in Canada, control from India, 40% of profit received in India, 1,50,000. Let us see how it is treated. So that is profit from a business in Canada, control from India. 40% of profit received in India. It will mean that 40% of profit will be treated as a Indian income. 40% of profit will be treated as a Indian income. So that's why it is taxable. I mean 60,000 is taxable in all three cases. That is 60,000, 60,000 and 60,000. So it is an Indian income. So it is taxable in all three cases. I mean ordinary resident, not ordinary resident and non-resident. And another thing is that 60% of the income, 60% of the income will be treated as a one type of foreign income. 60% of income will be treated as a one type of foreign income. So it is taxable. In case of a ordinary resident, and it is taxable in case of a not ordinary resident, as it is a one type of foreign income, because the business is controlled from India. So 60% of the profit out of 1,50,000, that is 90,000, it is taxable in case of a ordinary resident and not ordinary resident. So that is the third transaction. That is the third financial transaction. And the fourth one, profit from a business in Kanpur, control from Spain. Profit from a business in Kanpur, control from Spain. So Kanpur, it is in India. So profit from a business in Kanpur. So the nature of income is Indian income. Income is Indian income. So it is taxable. That is 92,000 taxable in case of a ordinary resident, not ordinary resident and non-resident. As it is a Indian income, it is taxable in all three cases. So we are discussing about the computation of total income based on residential status. So next one, technical fees received from Mr. Avinash, a resident, for technical services provided to a business outside India. Again, I am repeating, technical fees received from Mr. Avinash, a resident, for technical services provided to a business outside India, rupees 40,000. So here it is a foreign income. So technical fees received from a resident for business outside India. It is a foreign income, so it is taxable only in case of a ordinary resident. So it is not taxable in case of a not ordinary resident and non-resident. And the next one, gross dividend received from an Indian company. So now dividend received from an Indian company is taxable. So here dividend received from an Indian company, it's an Indian income. So that is rupees 42,000. So it is taxable in all cases. 42,000 and 42,000. As it is an Indian income, so it is taxable in all three cases. Ordinary resident, not ordinary resident and non-resident. And the last one, profit on sale of a land in India. Profit on sale of a land in India, that is 5 lakh rupees. So here profit on sale of a land in India, that is 5 lakh rupees. So it's an Indian income. It is clearly mentioned profit on sale of land in India. So it's an Indian income, that is rupees 5 lakhs. So it is taxable in all three cases. I mean, it is taxable in case of the ordinary resident, not ordinary resident, and non-resident.